Hey traders, welcome to wetradewaves weekly forex forecast. In today's video, I'm gonna share with you our forecast for euro dollar, pound dollar, dollar yen, along with a lot of forex pairs. On this channel, we explain you our point of view regarding the next moves in the market. Those who are new to wetradewaves channel, our weekly market forecast is published every Saturday at 4 p.m. UK time to help you be on the right side of the trade. So click the subscribe button, hit the bell icon, and let's dive into the charts. First of all, thank you for your likes and comments on our last week's forecast. This week was slow in the forex market, and this is normal, but not for indices. So when forex market is slow, you will expect some movements in the indices. This is why on our last Sunday session, we gave trades of the week from indices. We said SPX 500 up. This was SPX on Monday, 21st of June. And this was straight after the Sunday session. And as all of you can see, market went up all the way from here to here. So this was one of the trades of the week. Next one was DAX, and market went up from here to here. We are starting to get a corrective structure for another push up. Third trade was the GI, and this is Monday, 21st of June, straight after the Sunday session. Market started to go up sharp and fast. Those of you who are new and don't know what are Sunday sessions, check the description under this video or check our website. Now coming back to the XY. For this one, after this up wave, we are expecting market to give us a corrective structure and then another up move. Remember this, market will never go in straight line. Market makers needs to trap retail traders to go in the other direction. Big banks and big players needs liquidity, and this is why you will see market corrects downwards before the up wave. And because most of you are liking and commenting, guys, let me explain you more about this step. This move is not retail traders' move. This is market makers' move. Now, because most of retail traders, they trade lower time frames, they will trap them to go for this short because this is a downtrend for retail traders. Now, let me explain you step by step how the process works. When you see market going to the downside, as example here, some of retail traders, they will jump in from the top, those who would like to trade reversals, and those who would like to jump in. The second group is those who go with the trend. So they need to have a confirmed downtrend to go for the sell. And usually they are breakout traders. So they will go for sell orders under this low. Alright? Once they are tagged in, market will push up again. If they are tagged in under this low, most of them, they will put stop loss above this top and not this one. Even those who will put stop loss above this one, they will be taken out most of the times. Once market will start to go up, they are underwater here. So either they will be in drawdown or they will be out for stop loss. What will happen here? In this one as example, once you see this double bottom, this is a chart pattern for most of retail traders and especially for those who are new. So if they will get in here, most of the stop losses are under this low. So market makers, they will push market up. Most of them, they will be happy here. They don't know when to take profits, where's the target, how much I should risk, if I should hold or not, because simply they don't understand market structures. And like I said before, market makers and big banks and big players, they don't want you to be in with them in the right direction. So after this corrective structure to the upside, market will push back down under this low and then up again. In this case, guys, most of retail traders, they will be out. The majority of them. Let me just change the color to explain you about the second group. The second group, they will wait a retracement to go for the sell setups. So they might be in here with stop loss probably above this top or above this top. Also this group, he will be out above this top. Alright? Another group of retail traders, they will enter here for a confirmed downtrend because for them, they need more than low, lower high, and lower low to be convinced that market is dropping. And there is also another group of retail traders who will jump in because of fear of missing out. All of this, guys, understanding market makers' footprints and retail traders' footprints with combination of fundamental analysis and understanding of market structures creates waves and structures. Alright? And this where I said wave analysis is combination of more than one concept plus our findings. So let me explain you what we are expecting here, and then I will give you more examples. Like I said, this is because most of you are liking and commenting. And the more you like and comment, the more you will push us to give you more and more every single week. So for this one, we are expecting market to correct. So for this down wave, corrective structure, another down wave, and then one more push up. Regarding the bias, we are still biased to the upside for the XY. So this will be a corrective structure for another up wave. Analysis is one part, knowing how to trade is a total different story. And we teach all of this to those who will take our course. And by the way, guys, the deadline for June course is Wednesday, 30th of June. So only 5 days left. Anyway, coming back to the XY, let me give you more examples on how market behaves in these situations. Look at this. After this up wave, market went down, it gave us this up move as a corrective structure, it went back down, we broke this low, and then up again. Guys, this is one pattern out of 13 patterns that we study and we teach. Alright, so do not expect market to give you every time this pattern. This is one pattern that we look for. So when most of retail traders, they will be in here or here, market makers and big banks are collecting orders, they are building up orders here under this lows for this up wave. This is one example. If I zoom out, this is another example. Market went down, it gave us this up wave, it went back down. This is not the corrective structure, alright? After this down wave, we've got a corrective structure here for another drop. And there is a reason for this drop here. Market went down to an order block zone. After this drop, market went all the way up. Another example, this one. Also, this is not the corrective structure. Market went down, give us this up move, one more push down, and then up again. When most of retail traders, they will be trapped in this downtrend or in this down wave, big banks, market makers, and big players, they are building up orders and liquidity. Again, this is one pattern, one explanation, and just one simple part of understanding market behavior and market makers' footprints. Coming back to here, this up wave, it was expected, and there was a fundamental reason behind our forecast of a strong dollar. And all of you know this was FOMC meeting here and market shoot up. Even I'm repeating this, but we're expecting dollar to shoot up from May. Let me explain you more about this one. Even the XY structurally was ready to move up, inflation in US is rising. And when inflation will be rising, central banks have to take action. And one of the policies that they will implement in such situation is hiring interest rates. And this is exactly what Fed mentioned in the last FOMC. They said that they might higher interest rates in 2023, and if inflation continue to rise faster, they might do it early. This was the reason for this shoot up. Anyway, this explanation, guys, it was a thank you for your likes and comments. Euro dollar for this one, also market is correcting upwards for another drop. The way market is going up here shows us a possible corrective structure for another drop. So those of you are in the sell, you keep moving your stops. And those of you are not in, wait your sell setup before you go for the sells. At the moment, we can see euro dollar correcting upwards for another drop. Pound dollar for this one, we were expecting market to correct upwards for another drop. So market gave us this up wave and it starts to move down. If anyone of you is in the sell, you move your stops and let market unfold. For pound dollar, we are expecting more downside. But this corrective structure, it might be more complex than that. So corrective structure, another drop. This is how we can see pound dollar will behave. In all the cases, we will not look for buy setups, we are looking for our sell setups. And by the way, these are the lists that are covered on every Sunday. YouTube list as in-depth analysis, indices, other forex pairs, cryptocurrencies, stocks, and requests. Aussie dollar for this one, market is going to the upside. And this is part of the corrective structure for another drop. So Aussie dollar again, corrective structure for another drop. We are still biased to the downside and we will look only for our sell setups. Now especially for Aussie dollar and New Zealand dollar, we see them a bit differently. T will explain you the bigger picture for Aussie dollar and New Zealand dollar and what might happen next in details on Sunday session. At the moment, we can see Aussie dollar going down and we will look for our sell setups. If we see any change of structure here and if this starts to go down correctively, another push up. Let me be clear here. At the moment, we are looking for our sell setups. If anyone is in the buy, you move your stops and you let market unfold. Even those who are in the sell from higher levels, you move your stops and you let market unfold. At the moment, we are looking for sells. If we see any change of structure, we might update you in the midweek review email on Wednesday. And those who are new, midweek review email is for our subscription service members. Dollar yen for this one, market went down, it gave us a corrective structure, it went back down. The way market is going down here, looks like one more push up is coming. So after this up wave, we will look for our sell setups again. We will not buy this one, we will wait market to push up and then we will look for our sell setups. We will not jump in. And some of our traders, they might be buying this, alright? Because they know what to do. And some of them are scalpers as well. So for scalpers, they might be able to make money in this up wave. So if you are a scalper, swing trader, or position trader, wave analysis will help you. And understanding market structures, market makers' footprints, retail traders' behavior will definitely help you in forecasting the next wave and be on the right side of the trade. Anyway, for dollar yen, one will push up, another down wave. New Zealand dollar, like I said, New Zealand dollar and Aussie dollar, we see them a bit different. In all the cases, the next wave now is toward the downside, either impulsive or corrective. If anyone is in the buy, you move your stops and you let market unfold. If you are happy with the profits, you take profits. And those of you who are still holding the sells, you are in profits anyway. Pound yen for this one, market went in, we've got this corrective structure, we've got this down wave, and then this up move. All of you know the bigger picture here, right? We explained the bigger picture more than once. Now we are analyzing inside this structure. What next? Correction, another down wave. This is what we can see next for pound yen. In all the cases, market has to give us a down wave here. USOIL for this one, market went down, give us this corrective structure, it went back down, another up wave. What next? Corrective structure, one more push up, and then this drop. We can see a big fall in USOIL coming. What is the reason for this one? We don't know and we don't care. Structurally, this is ready for a big drop. Now, I don't want you guys to take only the forecast and you jump in. If you are doing that, most probably you will lose. You should not follow anyone blindly, even us. And no one will be right 100% of the times. Let me explain you more. You will be thinking, alright, from here you are telling us USOIL will drop and this continue to the upside. If 5% of the times market will be pushing up and 95% of the times after the completion of this structure, market was dropping, we will go for this part. Alright guys? So from here, market was ready for the drop. We've got a corrective structure, we can spot that internally, we know how to trade it, we do not jump in, and we know how to manage the trades. If you will jump in, you trade without stop loss, you keep adding to your losing positions, you will end up losing your account. And this is why I always say, do not jump in, never ever add to a losing position, do not trade without stop loss, learn first and then trade. We are not pushing you to take our course. You can learn trading alone. But if you need a shortcut, and the only shortcut to succeed in Forex trading is to choose the right community and learn from the right mentors who have a proof and feedbacks from internal members. If you are not willing to learn or invest in yourself, don't take the course. All what I want you to do, learn first and then trade. Because this is your hard-earned money. And this is not fair to lose it because you are following people blindly or trading Forex factory colors. Red sell, green buy. This is unfair. Anyway, coming back to USOIL, a drop is coming. More details regarding this one and the bigger picture will be explained by T in details on Sunday session. Gold for this one, market went down from here all the way to this level, 1775. After that, market starts to react here. We are expecting a corrective structure upwards for another drop. This is what we can see next for gold. Corrective structure upwards for another drop. So all of you are still in the sell and holding, you move your stops and let market unfold. How far this one might go? It might go all the way down to break previous lows. Those of you who want to learn and master our wave analysis concept, you can join our June course. We will share with you all our knowledge, we will train and guide you, and you will get a lifetime access to our private Slack group and our in-depth analysis service. Remember, the guidance through the live sessions is a next level guidance. Few days left because soon we will stop taking new payments for June course. Anyway, all the details are on our website, course page. $CAD for this one, we said last week we are expecting market to correct downwards. And there is a reason behind this deeper corrective structure. I can't explain you everything here, guys. This is unfair to us and to our private group members. What next for $CAD? We are expecting corrective structure, one more drop, another upwave. Again, this is one pattern and one possibility. And all of you know that here we are only sharing the bias. For $CAD, we are biased to the upside. Any buy setup we get, we will go for it. Those who sold from here take partial profits and leave the rest at break even. Silver for this one, we've got this down wave, corrective structure, down, correction, and down again. After this down wave, we are getting another corrective structure. So after the completion of this structure, another drop. This wave here, it was too sharp and it changed the structure for another drop. The more this will be going down, this will be better to invest again. Bitcoin for this one, this was a contracting triangle, market went down, up, and then we've got this down wave, we broke this low one more time. So from here we're expecting market to go down and break this low, we've got the break here. Wave analysis and structures works again and again. What next? This is a good level for investment. Now Bitcoin is on sale, which means instead of buying it at 60, now you have a chance to buy it at 30. So if you are an investor and you don't have this mindset and you cannot see it in this way, there is something wrong. What if you will buy it here and Bitcoin will go to 0 the next day? This should be only 5% to 10% of your equity. So do not go all in here. This is not gambling. This is investment. Alright? As investment, this is a good level. Most traders, they start to trade, they lose big, and then they decide to learn. Don't be most traders. You have to learn first, and then you risk your money. And by the way, guys, our June course is an interactive course. Once you make the payment, you will be added to our private Slack group and you will receive instructions on how to access the course materials in order to be ready for the live and practical sessions. And remember this, guys, the guidance through the live sessions is a next level guidance. With that note, I wish you a successful trading week. Thanks for watching. We hope that you learned something new. Subscribe, give us a thumbs up, this is very important. Leave a comment, stay safe, trade with care, and see all of you next week.